So the appraiser called Tidewater. What the heck is Tidewater? Because this property is nowhere near a marsh. Tidewater is actually named after a conference that was held in Tidewater, Virginia back in the early 2000s to overhaul the VA appraisal process. One of the biggest changes that came about from this is if the appraiser believes the value is going to be below purchase price, they have to pause the process. That has to go back to the real estate agents, give them 48 hours to give additional information to put in their report. Yes, the appraiser has to comment on the additional information that's provided. Then they wrap up the report and say whether it's at value or not. So at the time of Tidewater, you probably don't know what the value is going to be. It's just saying, I don't think it's going to come in at value. And the comments in the report might be something along the lines of, hey, the agent supplied properties 1, 2, and 3, and guess what I was using? Properties 1, 2, and 3 that sold for 480, 480, and 480, and you're in purchase contract at 520. Yeah, that's sometimes a challenge for an appraiser to pull off. But there are times, this is an amazing story. We had a condo. The neighbor had sold for 380 grand. Ours was in contract at 400. But the neighbor, it was the model match. It was you wouldn't even have to be drunk. You could walk into the wrong house and not realize it was so much the same. Now the neighbor's a quarter mile away and a half mile away. They supported our $400,000 purchase price. But the comp, the neighbor was 380 and it sold a month ago. It's like the appraiser's like, what do I do? So we went out to the agents. The agents brought the additional information back, which, oh, by the way, includes a narrative and a grid. Well, that narrative said, hey, that neighbor, I'll bet you didn't know that it had $20,000 worth of water damage during escrow, which was never disclosed anywhere. So we get that information back to the appraiser. The appraiser calls the listing agent. The listing agent goes, yeah, we went into contract at 400. There was 20 grand worth of water damage, so we sold at 380. That's why we sold at 380. And the appraiser goes, I got the comments to put in my report. I can now justify your $400,000 value. Done deal. This is why Tidewater is amazing, because had that been an FHA deal or a conventional deal, what would the appraiser have done? They probably would have brought the value in at 380 or 390. And when we said, but there was this issue, they would have been like, I've moved on. I'm done with that report. Good luck changing my opinion. So this is why Tidewater actually is an advantage for VA loans. I wish it was something that was part of FHA and part of conventional. And this is why, one of the many reasons why VA loans are awesome.